Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Today is the 21st of July. All right, let's get into what happened in markets today. We saw canola finish the day at $6.20 down. It was actually down double digits and came back and then went back down again. So it's been a pretty volatile day for canola. We'll show the chart on that. That settled at 694.10 today. Minneapolis wheat down 8 cents at 608.50. Kansas wheat down 3.25 at 525.75. Chicago wheat down 4 at 542.25. Soybeans finished the day 9.75 lower at 10.26 even. Bean oil on the December was up 23 points at 55.82. Corn down 4.75 cents. Not a good day for corn today at 403.75 was the closing price for corn. That is the September. Canadian dollar back above 73 at the time of this snapshot, 21 points as well. Live cattle up $1.80, 100 weight at 221, and feeder cattle up 360, 100 weight at 327.60. I believe both of those markets made new highs today in the cattle. We don't have charts today, but it only so often you can talk about new highs in this market. One other thing we thought we'd mention is we actually recorded an auxiliary video today for this channel. So it will be up about the same time as this one up as well. And we talk about the dollar, Jerome Powell, and how that relates to grain markets. So you're going to want to check that out as well. It's kind of a separate video because I didn't want to make this one too terribly long. All right, we're going to get into some weather stuff here. Now, part of the reason that we're seeing some declines in the markets in the last little while has been because of favorable weather. The next week, this is the 7-day forecast of total precipitation. As you can see, there's some pretty good precipitation coming into the U.S. Midwest and through, some of the corn and bean belt as well. Even some smatterings of stuff in the southern Canadian prairies region. Maybe a little bit drier in the central Canadian prairies region, but overall, still a relatively supportive forecast for precipitation for crop growth overall. I think that has put a lot of pressure into these ag markets in the last little while. Here also, there's some talk of a heat dome coming into the U.S. Midwest. You can kind of see this this is the European model 0 to 5 day average temperature anomalies. Now you can kind of see this present in the southern parts of the U.S. Midwest. So, down in this area. Now there are beans down in this area, through the Delta and things like that, but largely the corn and stuff is not necessarily at risk here, at least the major areas or the I states of corn. There is a few degrees of anomaly above zero here. Any of the orange, yellow, you only really start getting into damaging potential when you get into these deep reds here. So, not a huge threat. It's also not supposed to last for a very, very long time. So just to kind of keep that in mind. It does get a little bit hotter in the 5 to 10 day as well. And as you can see, that starts to creep into the western or the eastern side of the Corn Belt as well as through Minnesota and Indiana and Nebraska, or Indiana, Iowa, Illinois, those states. So, there is some concern. I think, the trade is somewhat discounting this. I think it is, not necessarily extremely hot. And I think the short-term nature of this heat dome is also a little bit more favorable overall. When you look at the Canadian prairies, there has been some very favorable precipitation through a lot of the areas, particularly, central and south Alberta, south of the Yellowhead, through the western part of Saskatchewan, through all through the southern part of Saskatchewan, south of Regina, and even into Westman here. It was a little bit drier in some areas here. My kitchen window marketing, my lawn here in Winnipeg is very dry and looks like it is dying a slow death of dryness. And I know a lot of our clients in that area of central and eastern Alberta are experiencing some continued dry conditions. But overall, there has been some favorable precipitation come into the Canadian prairies. The drought index, this is as of July 14th. So I just wanted to show this. This, of course, I think will improve as there should be another one out today, I think. But at the time of this recording, that hadn't been released yet. As you can see, there's a lot of the western areas of Saskatchewan have gotten a lot better as far as drought. Even some of these areas that were maybe in more severe drought, the drought has lowered. I think the rains that happened will continue to do that or continue to improve this situation as well, which may explain some of the weakness that we're seeing here as well. All right, let's get into charts here. Canola had, again, a bit of an interesting day. It was hard down earlier in the day, $13, $14 a ton lower. It rallied back to make up some of those losses. It was in the green for a little bit, and then all of a sudden it kind of fell off again at the end of the day. Again, we're still kind of trading inside of this channel that we kind of talked about last week. We are still a little bit worried here about the 20-day, 50-day moving average cross. That hasn't happened yet, but it will happen in the next couple of days. That kind of signals that momentum is still towards the lower side. We do have lots of support levels here, near 670, near 660, a little bit higher than those levels. So it's difficult to say. Seasonally, of course, we tend to see some declines in prices at this time of year. Just to kind of show you what that day looked like. As we opened the market, it started to drift lower and lower. It started to recover at one point. That was about, just before the open. At the open, it really, or just after the open, it really took a tumble, traded sideways for a little bit, and then rallied back to almost make up all those losses. And then into the close, we saw some weakness as well. Again, this market is sold relatively well or sharply long. That long position has diminished quite significantly, from about 144,000 contracts to 107 or something like that, if my memory is serving me correct. So there still is a long liquidation to happen here. I also think there's what I would call long liquidation happening at the farm gate. Any of the farmers who missed the rally from 700 to 750, which I understand was quite a lot of them. Maybe as the market inched back above 700, to make sure that they were still locking in profitable rates, I think, or profitable prices. I think there was a lot of farm selling happening in that area as well. I know there was premiums being thrown around, particularly for, late July. And even as we got into new crop, there were some premiums available in the marketplace as well. So I think there was some incentive and, selling, whether it's physical from the farm or if it's speculative selling to liquidate some longs in the spec position. Both of those tend to put some pressure into the canola market. All right, moving into December Minneapolis wheat. Now, we've been calling for a test of 605 for a while. We got down to 608.5 here today. Even if we continue to move higher after this, I would consider that a test of support. So, the thesis that we had that, we would run down test support has kind of concluded itself here, or spring wheat specifically. So, hopefully we can see it go back up. But as you can see here, the moving averages continue to show that there is momentum moving lower. But overall, the Minneapolis spring wheat market has been weak as the weather there has been improving. We'll show you about crop conditions in a second here. Here's December soybean oil as well. Wanted to show this just, it did make a new high on Friday. It came off those highs. It was trading lower as we got into the morning, but it did kind of finish off on a positive note here, opening slightly or closing slightly higher than the open at 55.82. We did see it run up towards 57 on Friday of last week. So just something that we're watching here. All right, let's get into crop condition ratings now. U.S. corn crop condition ratings remain static at 74% good to excellent. Now, the interesting thing is that the fair category, we actually saw a percentage point move from fair into into excellent to really. So we saw, a point probably move from fair to good, and then a point move from good to excellent. But we also saw a a reduction on the opposite side. So we kind of saw the crop get worse on both, or the crop, stay good on one end and get a little bit, or sorry, and then stay static on the lower end, but it kind of pulled apart at the middle a little bit. So maybe a little bit more dichotomy in that market today than last week. Soybean conditions fell to 68% good to excellent from 70. We're now at about average. This could be supportive to beans a little bit. I mean, these are still very good crop condition ratings for corn. So, and the losses today, are somewhat, with the heat dome coming in, and now these crop condition ratings you would think that soybeans are more supported than, or should be more supported than they are. But the market, again, it's a seasonal time for weakness, particularly as these crop condition ratings look pretty good. And spring wheat, actually, we saw that lowered to 52% good to excellent. And we also saw 3 percentage points higher in the poor and very poor category. So we saw some reductions from good to excellent, but we also saw some increases in the poor to very poor. So it is, you know, overall, I would say this should be supportive to spring wheat. Of course, we've seen, as we mentioned, that move down to test support. Perhaps this crop condition ratings will help that Minneapolis wheat market out uh, tomorrow as we move into the second day of the week. All right, that's all we have for you today. Thank you very much for tuning in. We will see you again tomorrow.